Hey everybody, this is Jose Blasco. We are about to get started. This is just a quick sound check before we start. As always, a quick hello on the chat box would do, so I know you hear me. That would be appreciated, so that way there is no delays on the start, because we all know that we are well connected and technology is on our side. So we got 15 seconds to go. Please go ahead and type a quick hello, so I know you're there and it's all good. Thank you so much, guys. Very good. Reaching the top of the hour. That's it. Perfect. Okay, good. Wonderful. How are you, Joe? How are you, everyone? It's a pleasure to see you. Let me turn on my video stream. Here we go. Maybe I'm going to put myself just a little bit more centered instead of so much in the corner. It was kind of painful for my shoulder, actually, the other shoulder. Well, not sure if it's a good idea to start the week with such a bad joke. But anyway, welcome everybody to the session. Today is February 8, 2021. This is Futures Now. We're going to be doing futures trading today, as we always do in the future sessions, obviously. The nature of futures makes it ideal to look at shorter term opportunities, while futures could be used for a collection of different applications. And therefore, what we're going to do is to focus on those short-term time frames, as you know, also typically with the shorter time frames, you would be able to execute more actively, and therefore this from a coaching point of view will give me the opportunities to practice more for you guys, and that will bring up more experience, more questions, more aha moments, and better learning. Okay, so I'm going to be acting quickly in the marketplace. I also have the tendency to speak fast, so bear with me on that, but if it's too fast, you have to speak up. So type it on the chat box at any moment in time, guys. I'm happy to pause, rewind, restart, whatever is needed for you to be able to follow properly. While sometimes, I do need to rush a bit because the market is the boss, not me. And if a trade is about to happen, I'll give priority to the execution. So then, even if you miss it, I can always, talk about, you got to see it and then you can watch the recording and understand better. So when you practice by yourself, it's all clear. But again, in a perfect world, the market would be kind enough to move fast enough so we can practice well, but also slow enough so we have lots of time to explain things at the right pace. Okay, so before we start, a disclaimer, let me highlight it on the upper part of the screen. Please read it carefully. This is important information. It's actually very, very important, not only important. Trading is a real thing. There is real money involved. There is risk. It is not a joke. And if you are experienced, you know what I'm talking about. If you are not experienced, make sure you educate yourself. You know what you're doing. Make sure you understand the disclaimer and beyond, because obviously trading is a beautiful thing to do, but there is risk involved, right? So you have to understand what's in your hands. With all of this said, it's time now to close the introduction slide so we can jump in TradesStation and begin our application. Okay, as always, I will start with the red screen. Since we got multiple flashing alerts, I'm just gonna go for it, and probably what I'll do later on, here we go. So probably what I'll do later on is come back and explain why do we have 15 here, why do we have 60 there. Again, for the ones of this, but for the ones of you that are new to the sessions, you may not know, and I wanna use some time to explain all of these so everybody follows. At the same time, there are multiple near sensible opportunities. Actually, we got 4, even though the one on the top will be discarded because the climate it's not confirmed. That's the meaning of the gray color under climate. Okay, so we have 3 opportunities, which is potential opportunities, which is the Dow, crude oil, and the Nasdaq. Those are the 3 opportunities that may give us a smile on our face as we look at the charts. So let's go ahead and load those particular charts. So crude oil, we said Nasdaq, and we said the YM, the Dow Jones. Here we go. So loading all of those charts so we can begin the planning. Now, especially because we are loading crude oil and it's a commodity, I will bring barchart.com. I always recommend, especially when looking at commodities which have multiple expiration dates, sometimes as often as every month, it's always a good thing, a good habit to go ahead and take a look. In this case, crude oil WTI, is crude oil CLH, 21 and look at what's the symbol that is being recommended by this website, which is the H, but always cross-reference with the volume and the open interest information and look for the greatest values there on the right and confirm if it's pointing at the H or not. In this case, it is. So we got H on the top and we got H in the specific row. So definitely we're gonna use crude oil H for our plan with crude oil, okay? So, and I got the H already loaded from the prior session, if I'm not mistaken. So we're gonna start the planning with crude oil. And then for the Dow and the NASDAQ, those are contracts which are very popular. Expiration dates are every 3 months. So we all know it's gonna be either H or M or U or Z, right? That's super known among futures traders. So I'll really explain that just in case you don't know if you are new to futures. But right now, let's focus on crude oil. So what do we have with crude oil? Well, with crude oil in the 15-minute time frame, we have a confirmed climate, thick and blue. It's being candle number 5, where statistics suggest that in the case of up climates, that number can go up to 7. I always take whatever it is and I round it up. So 617, I would call it 7. So from 5 to 7 means that if we enter now, we could benefit from the current candle plus 2 more. So that's 3 candles, 15 minutes each. So we may still have 45 minutes of time to ride a move on crude oil, assuming the other parameters of our trade plan will be met and the trade will be approved. If it's not the case, we'll go for another market. But right now, all looking good to continue exploring if oil will give us an opportunity or not. What else? For us to take a trade on crude oil, we need to find a green UFO. Why green? Because the climate is blue. So we are looking to be buyers. So we look at green UFOs. And in this sense, we want to be using UFOs located around our reference price, which is 57.73. Okay, and that would be more or less there. And on the chart on the left, there is no UFO. This one here, 57.73, no UFO, and 57.73, no UFO. Okay, so right now, while we have a proper climate and so on, unfortunately, we don't have the right UFOs in the right location. There are UFOs, but they are below our reference price, and that may be that we are buying when the climate is changing. It could certainly work because it's a UFO, but the probability is less, and therefore, based on the rules I use, which, by the way, it's absolutely fine that you guys have variations of the rules, okay? And I know some of you are working intensively in polishing and creating variations of trade plans, very well adapted to your personality, account size, and so on. And that, by the way, is the way to do it. But again, with the set of rules I am using, this trade is not to be accepted so far. Why? Because we do have UFOs, but they are not in the right location. So we have UFOs and the climate, but the UFOs are not being in the right location is a reason to invalidate trading crude oil, at least for a few minutes. Okay, now, even though I said a few minutes, maybe it take a few seconds because the charts on the right and the middle, which are tick charts and share bars, those are not based on time. So even if I say minutes or seconds, really it means nothing. And what could happen here, okay, is that any moment right now, like in 10 seconds, we may have a green UFO form, and then that UFO would be in the right place, and next thing you know, now a trade is to be taken, okay? But so far we don't have it, and because the radar screen was pointing at NASDAQ and the Dow, so I'm just gonna go ahead and look at those other markets and see if a trade is available. When you do this at home, typically you would be surrounded by a few monitors and you would put all your charts in different places so you can easily monitor, you can use alerts, you can use many things to make your life easier. Of course, when I am running coaching sessions for you guys, I am sharing one screen, and therefore I work with tabs in the bottom part of my screen, as you can see. And of course, that's less efficient from a visual and speed of execution point of view. But I guess is good enough. Okay, so I'm just going to move into NASDAQ and see what the NASDAQ is providing us with. And what the NASDAQ is providing us with is a confirmed climate. Okay, so it's thick and blue. So the climate is confirmed. And when we look at the stats, this climate is supposed to last for 7 candles. And this is candle number 2. Okay, so in other words, we are keen and happy and will be delighted to find a good entry point to ride a potential climate that could last another 5 candles. Okay, 5 and 2 is 7. 5 times 15, that's an hour and 15 minutes. So that would be a nice intraday move. Okay, but again, before we get too excited, we look at the reference value, which is 662, and 662 happens to be right a little above. And by the way, notice when I do drawings, I tend to, most of the times I will freeze the screen, so nothing moves and it's easier to understand. So notice that at 13,662, how are you, Boyan? Good to see you, my friend. Notice that at 13,662, there is no green UFO. Not only that, a red UFO is forming, which may be the sign that the climate may reverse. Okay, we're going to see that later in less than 15 minutes. Actually in 5 minutes. Okay, but no matter if there is a red UFO or not, this is kind of like to be ignored. Now we are looking for green UFOs because the climate is blue. Okay, and there is none. So therefore, it's time to move to the Dow and see what's going on with the Dow. Before I do it, I want to double check crude oil one more time to see if anything has formed. Nothing new has formed. So we got nothing on crude oil, nothing on the Nasdaq. So let's load the Dow Jones. Okay, and by the way, the Dow has been a long time in the room that I haven't traded it. We still have an old contract there. So let me update to the right expiration date, which is H21. So at YM H21, and let's start again our analysis. Okay, so what do we have with the Dow? Well, the Dow just started a down climate, which is confirmed. So with the Dow, even though the Nasdaq is suggesting to be a buyer with an up climate, with the Dow Jones Industrial Index, with the futures product that tracks that index, we are supposed to be sellers based on the climate, and those down climates are supposed to be 4 candles long. And this is, when I say long, I mean not length on the screen, but duration. So 4 candles, 50 minutes each, that's 1 hour, and this is candle number 1. So we may be exposed to close to 1 hour if we were to catch a trade on the Dow. Now, if we were to short the Dow, we need to find red UFOs, not green, because it's a down climate, correct? And in this case, we will want the UFOs to be located around 31,202. So 31,202 is more or less here. 31,202 is more or less here. 31,202 is more or less here. And funnily enough, which is not really funny, but just to use expressions of the English language, funnily enough, there is no red UFO in those price points. Well, actually, one just formed here. So now we have a UFO, and now we could plan on a trade. Actually, another UFO just formed here as well. So now we have UFOs that we could use to plan the trade. Okay, now, before I put time into planning this trade, okay, another UFO just formed here in the middle. So notice how the dynamic technology is showing us what's happening in real time. And, you know, that is likely going to push the climate further down. But I do have something that is really not ideal happening. And it's the fact that our reference value is 202, and certainly 202, it's not lining up with that UFO. It's not lining up with that UFO, but it is indeed lining up with that one, which that UFO ends at 210. Okay, so we do have a valid setup with the climate and the UFO on the right enveloping the EMA located at 31,202. So the setup is valid. Okay, the setup is valid. But what's the problem? Well, the problem is that that UFO, it's a very wide, okay, it's a very deep, very large UFO. And that means that the distance between my entry that will be here and my stop is going to be very far away. Therefore, my safety target is going to be just as far away. And therefore, my safety target will not act as a safety target, but it would act just as a target. So from a risk management point of view, I start at a disadvantage. Okay, so if the trade was taken with that UFO, that would be your entry, that would be your stop, and look at how cool your safety target would be here. It would be so easy. Well, easy is maybe too strong as a word, but it would be way easier to reach your safety target compared to here, where now you will need to go all the way to the bottom part of the screen just to get to safety. So when we see those large UFOs, again, you could have a rule in your trading plan, and it's fair enough to take it, especially if you are going to be using, let's say you want to really break it down and you want to use micro mini contracts. So you can certainly go very small risk, even though the UFO is large. So I'm not going to say it's wrong to take the trade. But in my case, I just pass. Why? Because you know, I understand that one of the key elements of success in trading is risk management. And when a UFO is large, I cannot change that. I cannot make it up. And when a UFO is large, then that makes me start at a disadvantage with such a far safety target. So when that's the case, I prefer to go back to my red screen and look for other opportunities. That's what I prefer to do. Okay, and in this case, we don't have anything new. We only have crude oil still pointing at a trade, potential trade. So let's go back to crude oil and let's review what is happening. Knowing, by the way, that right now we just hit 15. So now we just have new definitions of climates, okay, new definitions of climates and everything else. So with crude oil, the climate is still blue. Okay, so it's 6 out of 7, so it's still time to go in. But unfortunately, we still have the same problem, which is 57.72. It's more or less where the current price is, and there is no UFO at that price. The UFOs are below. So we have the same situation with crude oil. Nothing can be done. With the Nasdaq, as we kind of suggested was going to happen when we saw those UFOs, red-colored UFOs show up, we just got a change of climate. It was blue, now it's red. Okay, so definitely no time to trade the Nasdaq to the long side, and if any, it will be time to trade to the short side. And it is possible that when looking at here we go. Notice how now the Nasdaq is showing up with the red background instead of blue, still near sensible. So let's go ahead and explore if the Nasdaq is giving us an opportunity or not. Okay, so change of climate on the Nasdaq. A little additional hint. Question here from Joe. Let me take a look at Joe. The YM is up for the day as of now, but you are looking at YM short. Don't you have better odds if you wait for a long setup instead of for a short setup in cases like this? Well, it seems to me, based on what you're saying, Joe, that probably you are running some sort of relative strength analysis in your style of trading. Nothing wrong with that, but like everything in life, everything got pros and cons. So true it is that if you were to identify that the Dow Jones happens to be one of the strong market indexes, so shorting it may carry less odds compared to shorting other indexes that are weaker. At the same time, while that's true, if you were to have that rule as a rule which is imperative to follow in your trading, you would basically end up executing less trades per day, because there will be situations where you have UFOs and the climate and everything else, and you could go ahead and go short, but then because you have an additional rule that has to do with relative strength, that stops you from trading because you want to short the strongest market. Okay, and your rule may not allow you to do so. So again, your rule should add some additional odds, so that's not a bad rule to have. At the same time, it may imply less trades to be executed. And therefore, at the end of the year, it may be better not to use that rule. Again, am I suggesting that you don't? No, I'm suggesting that you will need to go ahead and backtest to find out the impact. Because again, the specific time frame you use, the specific way you have to assess relative strength is unique to you, and therefore you will need to backtest to be able to measure the impact of using or not using such rule. Okay, in my case, I'm not using it, and it's fine, because I got my trade plan under control, and I know it's fine, at least based on my mindset and my style of trading. So I'm okay with it. Okay, but again, your comment makes a lot of sense, Joe, and why not to incorporate that rule in your plan? And if you're gonna do it, backtest it so you understand the impact, and then you decide if you want it or you don't want it. Okay, very good question. Sandeep, nice to see you, Sandeep. How are you, my friend? So anyway, so we are looking at the Nasdaq. Again, the Nasdaq just started a down climate. Okay, just started a down climate, and in that sense, we are now authorized to start planning opportunities to short the Nasdaq, where in this case our shorting price would be around 657, which is more or less there. Okay, so 657 is that one, that low UFO is what price? 659. Okay, 659. So it may work because the current price of the Nasdaq is 649. So if the Nasdaq was to go back up, go back up, go back up, and get to the UFO, then the Nasdaq would have moved up by 10 points. And the moving average, which has the word M, the letter M in it, which means moving, the moving average would move up in this case. And therefore, even though the current value is 57, almost 58, that value may become 59.25 or above. And therefore, that UFO may be a valid entry. We may need to do a little bit of monitoring. I would say it's good enough, but certainly it would be good to do a little bit of monitoring to make sure that, you know, the setup where we want the UFO to envelop the EMA, it's actually a real thing that is about to happen. Okay. Now, from a risk point of view, I am a bit uncomfortable, just like I said about crude oil, because this UFO size goes from 61 to 76. Okay. So we are talking about 15 points of risk. And again, that means that you need to see that the market travel in your direction by 15 points for you, just for you to be right. Okay. Now, 15 points on the S&P could be seen as a lot. 15 points on the Nasdaq is not that much. Okay. And if you look at the size of that UFO and that UFO, just to be visual, that one seems to be a bit larger, but not that crazy larger. Okay. So in this sense, I would say that we're gonna go ahead and put a trade together because this trade, while it's not super ideal with a narrow UFO, it's not a crazy one. Okay. Now 15 points with a point value of $20 a point means that every contract would have a risk of $300. So if you're gonna do it like me, where I always use at least 2 contracts to be able to have 2 targets, safety and final, then you would have a risk per trade of minimum $300. Where if that was to be, $300 per contract, which times 2 is $600. So if this was going to be too much for some of you guys, so it's simple. You can go ahead and trade the micro E-mini, right? Which is going to be 10 times less, okay? And therefore, this divided by 10 becomes 30 times 2. That's $60 of risk for the trade. It's going to be a bit more because our stop is going to be beyond the UFO. So it's going to be slightly more, but it's about that, okay? So it's a relatively small risk, especially if you use the micro E-minis, okay? So let's do that. Okay, let me go ahead and emulate that I am a trader who is learning how to trade. Actually, notice that I already have the M. Okay, so while I'm charting NQH21 on the matrix, because the other day I was using the micro E-minis, so I got the M NQH21. So I got the right contract already input in the matrix, okay? So I'm gonna trade the micro minis, but the analysis, the charting and the UFOs, I will do it on the regular contract, okay? Because I'm gonna get more precision there, given the fact there is more trading activity, okay? Cool. So, so let's go ahead and find our target so we can have a full plan. So we're gonna be shorting the Nasdaq. So I'm just gonna turn on AutoUFOs. And looking for a target, and notice how the target is located all the way, okay, all the way down at 15,523.25. Okay, now, can we get there in one day? Yes. Is it likely? No. It's very far. Again, we're gonna set it as a target because it's there and we don't break the rules, we don't make up targets and things like that. But trading experience will tell you that probably what will happen is that you will trail stop, you know, if the trade works well, you will hit safety target and then begin trailing stop, and somewhere in between the entry and that fantastic target point, located at 13,523.25, then somewhere in the middle you would end up exiting the trade maybe an hour from now, 2 hours from now. Probably that's going to be the outcome, okay? That would be the outcome. So I mean, could you get there? Yes, of course. You know, something's going on now. Elon Musk says something about the cryptos again, and you know, next thing you know, the world is crazy again. So we never know, and we want to set the targets where they are supposed to be, because from time to time you will hit those really far targets. But notice I said from time to time. So don't get frustrated if you don't, because we are not shooting for that target. We are just setting it just in case. We are just gonna trail stop, and see how far it goes, okay? So 13,523.25, okay, that's the number we want to remember. So 523.25, Here we go. So I'm just gonna write it down here so I don't forget. So 13, 5, 23, 25. This is gonna be our final target all the way down there. Okay, and the entry is going to be that UFO located at 659.25 with a stop above 676.75, which is gonna be 677 round number. Okay, so 659.25. Let me write it down as well. 13, 659.25. That's gonna be the entry with a stop located above 76.75. So it's gonna be 77. Okay, so to enter this trade, I'm just gonna use the order bar. I'm gonna use 2 contracts. Okay, 2 contracts for that. Careful, I'm using the NQ and I want to use the micro NASDAQ. So it's either you add an M in front, okay, or before you click on the order bar, make sure you click on the matrix and then you go for the order bar, and now you will have the M. Okay, so I'm gonna go with 2 contracts, okay, and OCOOSO to short with 2 limits and 1 stop. Okay, and the entry, as we said, would be 13, 659.25. The stops 13, 677. Okay, 13, 677. And then the final target 13, 523.25. And then the one thing I need to calculate is the final target, and for this I will need a calculator. So I'm going to go ahead and calculate distance between 13,677, which is my stop, and the entry, which is 13,659.25. Oh, I didn't do it right. So 13,677 minus 13,659.25. Here we go. Now I did it right. That's 17.75 points. So actually I said it wrongly earlier. It's more raised than what I thought. I thought it was 15 points. Is more than that. So this minus the entry point, which is 13,659.25. This will tell me about the location of the safety target, which is 641.5. Okay. So 13,641.5. This is going to be the location for the safety target. And with all of this in mind, I'm just going to zoom in so you guys can take a screenshot or see that more closely. And then I will place the order. Okay, and guys, you feel free to give me a little bit of feedback. If you want me to repeat something, I'll be happy to do it. I will enter the trade now and looking forward to look at other opportunities because the NASDAQ seems to be falling down and continue expanding the climate. So far, I'm not sure in the next 15 minutes, actually in the next 3 minutes, the NASDAQ will come back up and give us a fill. I'm not sure about that. And if that's not the case, then we may need to replan the trade. We need to keep readapting as the climate keeps propagating. We need to keep readapting the trade, and that implies potentially changing the entry points, okay, to new UFOs that may be available now. So we are adaptables. We traders adapt to the market, and here we go. A new UFO just formed. So I'm just gonna click send order, okay, and as I click send order and I click yes, so now on the matrix, okay, I'm gonna explain it here on the matrix, so you could see how we don't see it on the chart because the chart is the NASDAQ, where the matrix is the micro NASDAQ. So you can see how 659 is my entry, where 677 is my buy stop, okay, buy stop, and then if I go down to 641, that's my first buy order, which is my safety target. And if I go down all the way to 523, which is really far down, really far down. So here's my final target at 523. Okay, so the trade is in, okay, and again, all is good so far, but in less than 1 minute from now, we're gonna have an update on the climate. And what I want you guys to understand is when the climate updates, I just froze the screen, not only we will have another dot and we'll confirm that it's still time to short or not, but also our reference value for the trade will change. Okay, so if instead of 659, it becomes, let's say, much lower as 650 something, like is the case, notice that that's going to be the UFO to use now instead of the one that we used above, isn't it? And we may have to change the plan of the trade. Okay, so it's really looking like that's going to be the case. So let's go with it together. Okay, 13,623 or 523? It's 523. 523. Sandeep, it was very, very far down. 523. So 5 seconds to go. I'll have a sip of water. Here we go. So we got the update. Okay, so the climate is still down. Okay, the climate is still down. We still have, a thick dot there. So all of this is good. 2 out of 4 candles. All of this is perfect. But notice how now we are looking at 652. Okay, so where is 652? It's right here. Okay, and by the way, price is just entering. Yeah, we may be missing the trade. I may be talking a bit too much here. I should be moving quick here. The entry should be 640. Okay, 640. 656 will be the top, which is above this one. So those two UFOs really, the UFO in the middle is inside the UFO on the left. Okay, but the top 653 is above 646. So we are gonna have to go with a stop located at 653.25. Okay, and therefore I'm just gonna go ahead and cancel the trade that we have at 659. Yeah, so just click to cancel, and we're gonna re-enter a new trade with 2 contracts. 640 is gonna be the entry. So 2 stops, 2 limits, two limit and 1 stop. So notice that if I had been quick, we would be already in safety, right? Because that wick that touched the UFO was an entry, and it already moved the equal distance from entry to stop below, so we would be already in safety. Okay, so if instead of delivering the session and having to pronounce many words where I'm planning the trade, I was doing this by myself, I would be rushing it and I would be in. But it's okay. Let's not get greedy or anything like that. It's just part of trading. Sometimes we miss trades. In any case, let me put it in case price comes back. So 13,653. 656.25, that will be the location for the stop. I will zoom in a minute. So 13,653.25, which is above, okay, which is above that UFO. Okay, that will be the entry. My final target is still the same, 13,523.25. Okay, still the same. And then safety target, I'm gonna have to do the math one more time. So we are looking at 640 minus 656.25, and this is below 640, so that is 623.75. Okay, so that would be the location for the safety target, 13,623.75. So zooming in, so you guys can take a screenshot. Again, entry with 2 contracts at 640, stops for each of the contracts at 656.25. Same distance below, we got our safety target, 623.75, and the final target, which is that ideal target all the way below at 523. Okay, again, not likely to reach that target in an intraday move, but we are ready for it. So click send order and validate 1, 2, 3, and then the order is there. Okay, now of course the Nasdaq is just collapsing like the world is ending. Again, it gives us the impression that, oh my God, we're gonna miss the trade again. Again, manage those emotions, my friends. When moves fast in one direction, often moves fast in the opposite direction. Maybe 2 minutes from now, we get an entry. We've seen that many times. Okay, so everybody manage your emotions. Of course, it would be ideal that the market takes it easy and comes back, efficiently back to our entry here located at 640, isn't it? Our sell order. It's looking like it's just crashing and falling down. But again, let's just wait patiently with our discipline that we always employ in every single trade. Okay, stop is above at 656.25. Sorry for that. And when looking below, so we have our safety target at 623.75, and again going down all the way to 523, we find our final target right there with the B for buy. Okay, so the order is in, the trade is ready to be executed. We got, until we reach 11:45, we still got like 10 minutes for price to come back, enter that UFO, and the trade is valid. Okay, let me see what else is available, because I would like to add a few more comments to this trade. Also, you may have questions, please type it in. But in case there is another trade to be executed, I'll check the climate first. Okay, so what else is available? The Dow is also pointing at near sensible. So before I make an extra comment on NASDAQ, let me take a look at the Dow in case something is to be executed on the Dow. No. Anyone by any chance was looking at the Dow while I was planning the NASDAQ, and maybe there was an opportunity that I didn't see and some of you took it? I'd be curious to know. So the Dow has a confirmed climate, 3 out of 4, so still time to go. 31,192 would be the entry. So notice it came perfectly to that price point. That was, when it basically caressed that EMA and from there started dropping. So if there was a UFO at that time, you would have taken the trade. Of course, I was not looking at the chart, so I don't know. Right now, at 31,192, there is no UFO in any of the charts. Therefore, the Dow, as of now, is not giving us a trade. The NASDAQ is. Okay, so we're going to wait patiently on the NASDAQ. Okay, and by the way, notice a UFO just formed. Okay, but notice how the top is 190 and the EMA is above. Okay, is 191. So the UFO by one tick or 1 point in the case of the NASDAQ, but it's not enveloping the EMA, and therefore we just pass. Okay, we are not gonna take this trade with the Dow, but with the NASDAQ we are ready. Okay, we are ready. We just need the NASDAQ to go back up. Okay. Okay. So what else is happening? Nothing else. Okay, nothing else, because if I zoom in, notice the word hopeful. Okay, and hopeful basically means that the climates that we have available, they've been running for too many candles in that direction. Okay, 29 candles in that climate, 22 candles in that climate with gold and the Russell. That's amazing. Okay, but while it's amazing, it's not what probability suggests would happen. Okay, so if you enter now, you are indeed late to the party. Now, could a market with a blue climate, meaning a market that went up already for a lot, could a market which is very high keep going higher? Yes, but normally you would see the market, take some sort of a rest by changing climate or going from confirmed to unconfirmed or something like that, and then push again. It's unlikely based on probabilities that it's going to continue. Okay, so that's why we got the word hopeful, and therefore you could load the charts out of curiosity, but taking a trade in a hopeful climate would not be a smart choice. Again, I don't say it. It's probabilities say that. Okay. So again, back to the NASDAQ. We are in waiting mode, and I wanted to add another comment. It's going to be unlikely for price to come back in a few minutes because we got another UFO just formed and another UFO. So again, coming back all the way that high, it's gonna be difficult. Okay, so we are gonna be very likely, I would say, going to miss the trade. Again, it's part of trading. Sometimes the market just go, and you are in and it's amazing, and sometimes they go and you miss it, and it's okay because there are other markets to trade. You need to use patience, and that's it. Okay. But anyway, the one thing I was going to comment is that notice that our entry was planned using that UFO. Okay. And my friends, I know I speak fast. I know I added a lot of information. I'm about to add more. So if this gets confusing, please type your questions. Don't be shy. And I'll be happy before the session is over to re-clarify everything, okay? But again, we planned the trade earlier utilizing the UFO I'm pointing at, that one here. And as I was speaking, and as I was entering the order, okay, I saw that UFO form. Okay, and I didn't say anything, but I saw it. So now notice how those two UFOs overlap. Okay, there is an overlap. So again, what would be the real smart choice? Okay, well, the real smart choice would be to set your entry using the bottom one, right? So you don't miss the trade, because something that could happen is that we have the entry located here at 640, right? That's where our entry is. And you see the NASDAQ go back up, hit that UFO, and then keep going down. and the climate propagates, but you are not in because your entry was higher. Okay, so the ideal action to not to miss the trade would be to reset the entry down here, which is instead of 640, it would be 631.25. Now, if you were to do that, great, because your probability of missing the trade, assuming Nasdaq is going to bounce back up, it's very low. So great. But what's the bad news? Well, the bad news is that you cannot set your stop above 41.25 because that would place your stop inside the next UFO, which is where we want to enter actually, because we understand probabilities on our side to see the market fall. So you would have to set your stop above 56, which is where it is now. In other words, the risk of the trade will be all the way from the bottom part to all the way to the top part, and therefore we are in a situation where while each UFO it's kind of okay based on its size. I mean, the one on the top is a bit large, but you know, let's call it okay. Well, now because they overlap each other, the resulting size of both overlapping UFOs together, if you group them, right? So the resulting size is indeed the same size of a large UFO, and therefore your safety target would be so far down. So in other words, I would, in my trading style, with my personality, my rules, then I would just consider just to go ahead and leave the trade the way it is and be happy missing the trade if the Nasdaq was going to come back and react to that UFO and then go and I miss it, which could happen. Just make sure, be prepared from a psychology point of view to see that happen and not to be impacted by emotions. And now next thing you know, you get upset and you want to change the market because you're like, oh, I knew it was going to turn. Well, again, if you knew it, just add all your money, you know, and you know, if you know something's gonna happen for sure, just call everybody, all your friends, everybody you know, and tell them to take the trade because it is the trade of your life, right? So we never know it, okay? This is trading, guys. It's all about probabilities and it's all about managing risk to be safe. So the reason why I said stick with the upper one is so I can manage my risk better by having a more achievable safety target, okay? And therefore, you know, everything is gonna be more under control, especially if you think beyond today. If you think about what happened after 1 year of trading, what happened after 6 months of trading, even what happened after 1 month of trading. So everything is gonna be more under control if you approach it the way I suggested. Instead of greed kicks in, you don't want to miss the trade, you suddenly don't care about managing risk, you decide, you know what, I'm just gonna go with one contract, no safety target, let's see what happens. All of those approaches, which are, you know, reasonable in the initial stages of a learning trader, that will not be, you know, the right approach to trading to create consistent results, you know, in your trading activity. Okay. So again, long stories, long explanations. Hopefully they have plenty of value for you guys. I'm always thinking, apart from ideally in a perfect world demonstrating many trades, which today I haven't taken any so far, but apart from thinking of demonstrating as many trades as I can, I'm always thinking when the session is over later in the day, tomorrow, you know, my students are going to be practicing by themselves. Things are going to happen. Thoughts will cross their mind. So I'm putting myself in your shoes by using my experience from when I was a student myself. And, you know, I'm kind of phrasing certain things. So when it happens, it resonates with you and you're like, oh, wow, that's what Jose said. And hopefully you have the right action. Hopefully it resonates. And hopefully my intention actually is helpful to you guys, which again, that's what you guys say when you send emails and so on. But certainly always happy to get your feedback. And maybe you say, Jose, hey, I prefer to do this. What do you think? Or hey, Jose, you know what about you do this instead? Or any comment is valid. Okay, guys. There is no one way on how to trade. There is no one school of thought. There is no one technique. There are millions of ways on how to trade. There's infinite approaches on how to trade. And now there is a framework where if you put it in place, you will be successful. And there is a framework where if you don't put it in place or you break the rules, and even though you have a framework, you don't apply it, then you get in trouble. And basically that framework is about you having a methodology that gives you an edge. You manage your emotions when you apply that methodology, which also implies discipline, obviously, and you manage your risk as you manage your emotions and apply the methodology. So you have psychology, risk management, and methodology under control. Those are the three key ingredients. We could talk about more ingredients if you wish, but those are the key. Okay, if you miss one of them, that's it. Forget about it. Okay, so the methodology, to be honest, is the least important. Okay, we are fans and we love the UFOs because, let's face it, they are very relevant. Is the fuel behind why markets move. No on-field orders, no movement. I mean, the markets are closed. How many orders get filled? None. So how much the markets move? Nothing at all. Even if something crazy happens, like an earthquake or something happens somewhere, the markets don't move, right? Why? Because the markets will only move when the orders get filled. So again, we love the UFOs, okay? We would not know how to trade without the UFOs, if you wish. But you could certainly, approach trading in other ways, and it's fine too, as long as you have an edge, which is proven. You manage your emotions, and you also manage your risk, okay? Your risk management. So anyway, Tony, thank you so much. Yes, and I guess your thank you, it's out of gratitude, which I appreciate. It's probably also because you're probably watching the time and you're realizing, hey, Jose is about to conclude. So I appreciate your thank you, my friend. Looking to see if there is another opportunity for me to plan, and unfortunately there is none. The Russell has an alert near sensible, but unfortunately gray box means it's not confirmed. So I'll just load the chart so you see how that looks like, and then we will call it a day. So loading the chart for the Russell, okay, RTY H21, okay, and notice how the climate is not confirmed with the thin dot. Okay, what a climate we had before. Okay, what a climate we had before, non-stop, going non-stop. So anyway, but now the climate is not confirmed, so really doing any trading action would have less odds compared to if the climate was to be confirmed, and therefore the smart choice, at least the one I apply in my trading based on my rules, is not to trade and wait for the gray box to go away, and therefore the climate to be confirmed. In any case, as always, everybody, it has been my true pleasure, always my pleasure. I love this, love the markets, love spending time with you, the coaching, sharing my passion with you guys. It's very enjoyable and I love it. So you guys keep up the good work. For the ones of you joining the sessions, and not only joining, but staying all the way to the end. I know we share the same passion, so thanks guys for your support and being there. See you soon. See you in the next one. In my case, it's gonna be on Thursday with options, but don't miss Pedro tomorrow with more futures and all the other coaches throughout the week. And also make sure you take a look at our webpage, because we got many updates in the webpage. So take a look. There's a whole collection of new courses, including futures, including stocks, including backtesting, including all sorts of things. Take a look, as well as new memberships, as well as for the UFOs. We released yearly memberships, which allow you to have a little bit of a lower price point to get your UFOs and everything else active on your trading platforms. So take a look, and if you have questions, shoot an email to our support team, support@tradictive.com. Everybody, take care. Keep up the good work. Super pleasure. Again, keep it up and be disciplined, everybody. Take care. Bye-bye.